Hey guys, it's GNFX, and I just want to put up this webinar and show you guys how you can approach the market with a different kind of mentality and the right way. Okay, I personally know that some traders, okay, or most of the traders that are actually unsuccessful, okay, are ones that tend to want to trade the forex market without the right information on how to do that. Okay, and it's not basically supposed to be so, because definitely if you are to trade the the, the forex market, all right, you need some level of wisdom. Okay, you need some level of understanding. You need some education, okay, to start with. Okay, you need that understanding of the general work frame, okay, of the entire market. Okay, so this way you would be able to know and detect what you want to do at any given point in time. Okay, and so many times I get to hear educators talking about pay correlation, looking at several things in the market. But I want to quickly tell you that there are things that work in the forex market and there are things that don't work in the forex market. All right. So apart from the psychology behind trading, you need to have a certain level of mentality and a certain level of wisdom to be able to successfully decipher what the market is going to do at any point in time. All right. I like to tell people that you have no right trading all the market. Okay, be it futures, be it commodity, be it metal, be it crypto. Okay, so you need to trade the market which you understand perfectly, and you have a good understanding of what moves a particular market. All right, so I could wake up in the morning and decide to say, okay, for in the next 2 months I want to only short the CAD. Okay, that is an idea which I have come up with because of a scientific research and analysis which I have embarked on. Okay, so I tell people that trading is more science than art. Okay, you need to perform those investigations. You need to cross-reference it with other tools. You need to reference it with other things in the market to be able to understand what is going on in the general sense of the market. All right, so today I want to be showing you how you can do this. Let's get right into it. Okay, in front of me today I have a chart of the crude oil. Okay, here's the crude oil. Okay, here's the crude oil, and also this is the CSY, which is the Canadian dollar currency index. Okay, so this shows you what is happening with a particular currency at any given point in time. All right. I, for some of you that already know this, okay, I'm going to show you how this mixed up. We can see here that far back from 2013, when we had price of oil in all-time high here, okay, and we had price of oil, okay, let's go to all-time high to see. Okay, this was possibly this was all-time high. Okay, this was trading at all right, just $104 per barrel. Okay, and you could see that during that time there was a rise in oil price, and there was also a rise in CAD. Okay, and if you would notice that during that time the CAD was very strong. Okay, when we had that fall, okay, in the oil price, you also see that the CAD did also fall. So if we would take a quick look and see what happened during the time which oil price then started to drop far back in July, all right, 2008. Okay, so if we just quickly look at any chart whatsoever, so let's just quickly look at any chart whatsoever. All right, let me take you to my MT4. So this discussion is for, let's go back to check the date. This is for July 2008. Okay, so 2008 is somewhere around this. So this is 2003, 2002, this is 2007, this is 2008. So you could see the swift movement in terms of the USD Canadian dollar, indicating that the USD Canadian dollar moved up, indicating weakness in the price of crude oil, and also indicating this weakness also coming in here, guys. Okay, so this gives me an idea, it gives me a foresight of what I want to do on a longer term when it regards the crude oil. Now then we also saw then that that was around 2009 when the break came in here. Okay, so if we go to our chart, we are going to see that around 2009, which is here, January, you could see that that break came in, and you can see how then USDCAD then started going down. All right, it started going down, and if we look at the previous level that was previously hit by that structure or during that time, you could see that it did not have a lot of strength or enough strength as to take out whatever happened here. Okay, so now we are seeing a movement to the upside. Okay, this movement will also reflect in the price of oil. Okay, so from 2009 we saw that movement coming into oil, and oil indeed hit its marks. 2011, after then hit its marks again. 2011 here, and we could also see that the CAD indices or CAD index also hit its high around that same time at 97. Okay, so let us quickly go to the chart and then see at 2011 what happened. In 2011, we could see that this also hit its bottom, okay, because of that strength, okay, in the crude oil price and also the CXY. Now you could see that from that point on, we started having a decline in the oil price, and you could see this rise in the USD to this high. Okay, so if we look at this high here, this is around the 1.464, 1.446. Okay, this was the area that was tested before. This was around 2016. So if we go to 2016 on our chart, you would then observe that during that time, okay, during that time, oil hit its low then. Okay, let's just zoom in so you can see clearly. Okay, we saw that 2016 that oil hit its low around 68 per barrel. Okay, so that was around, okay, that was around the same time we had the USD actually make this rise into hitting this zone. All right, so you can see all the movement here reflected because then oil price was coming down, and also the CAD, okay, indices was also going down, thereby causing the USD CAD to move up. Okay, now we have that price then hit this high since 2003. Then we still have an all-time high with the USD CAD, okay, here far back in 2002. Okay, so definitely on the longer term, we expect to test this high if oil price then goes sideways. So if at one point we start seeing oil price go sideways without no much improvement, now if the USD can actually gain more momentum, we could see the break of this channel. But definitely if there is one thing I would want to tell you guys, if there's one thing I want to tell you guys, is that this level with the current oil price should not be broken, no matter what happens to the dollar indices. Let's go still down. We saw a massive drop here to 2019 on oil, and we hit 68 again, one more time. Last time we hit that zone, we hit 63. This was a drop to 68. And in 2008, 2009 January, if we go to look at our USDCAD chart, we also saw that in 2008, 18, 19, we then saw that this consolidated all through the year. Let's zoom in, guys. Let's zoom in, guys. Let's be on the weekly chart. On the weekly chart, guys. I took this trade with the students far back then, and also I want to be taking another trade. So at the end of this presentation, if you would stay with me to the end of this presentation, I will give you and all my audience, okay, a setup that will capture for you within 3 months, if you would be willing to stay in the trade, within 3 months, we'll capture for you, for real, 1,500 plus pips. By just risking, your risk will be as little as minus 150 pips. So guys, you will be making more than or up to 100% of your capital investing on the USDCAD trade setup, which I will give at the end of this presentation. So if you would permit me, let's go back to see what happened in 2020. Now, the whole of 2019, we saw that USDCAD was in some sort of wage pattern. It was consolidated. After this time, we knew that we wanted to go long on this because definitely we have an indication using the COT report that there is something coming up with the CAD inside of here. So immediately we saw this consolidation here, I knew that the next direction for the USDCAD would be to the upside, because definitely if the crude oil, I'm looking at crude oil possibly in the near term being more sideways rather than uptrend. I'm seeing crude oil in the near term revolving around at the max $60 mark, at the least $30 mark. So we would having this up and down movement around the crude oil price, and during that time we would then identify the high, which we are about getting close. And as you can see that the USD is coming down because of the resumption of strength. If we should go to look at what I am talking about, you would see that here crude oil did hit its lowest at this point. So during the time of this drop, the USD was still making an uptrend. Okay, so after this drop to hit the 0 point, okay, we then started to see crude oil come up here, also with the CAD indices coming up here. We then started to see that rise coming up here, and I would want to see this high being tested, okay, and also I would not expect the CAD indices to come into this zone again. Okay, reasons why I put this is because, one, we have the CAD interest rate at its max. Okay, so same situation which I spoke about 5 months ago with the USD, either inflate or die. So we are going to be having almost a similar situation with the CAD. Okay, so we are going to see the CAD probably in the next probably 1.5 years from now. start talking about reducing interest rates. So we're going to start hearing the news like recession, okay, recession, and a lot of things, uncertainties coming into the CAD, production costs going up, and results coming down, and you're going to hear this soon enough. All right, and I will not be the guy that said, I said it's going to happen, but I will be the guy sitting there and having so much pity for those that do not have this idea. So if you're looking at across the interest rate for all the economy here, you would see here that everything have changed for various economy, okay? Even before the COVID, okay? Even before the COVID, there was significant drops in terms of the interest rates, okay? That also will boost the economy too, okay? And also maintain inflation, okay? But here for the CAD, we see a little bit of change here, a rise here. Now for the rise. So this was just to regulate, I believe that the Central Bank of Canada had certain plans in place in order to regulate the economy with this interest rate to avoid inflation, okay, to avoid inflation. But definitely, we will get to a point whereby this would be inevitable. So we would expect a drop back to 1.5. Probably that might not still be enough. It might then drop to 1.2, and also we may even drop into 1.0, which we saw back here in 2017, 2018. Okay, so looking at the whole forex market, we are not looking at just the chart and then making a decision of the chart alone. We look at various parameters, we look at various things in the market, and we base our decision based on scientific research which we have performed over time. So here in the academy, GW Trading, we teach students to be able to look at the market from this point of view. So looking at the general market overview, I can identify that that the highest point, which we started having the drop, okay, on the crude oil was last seen at 72 per barrel. So no matter what happens, I would not expect to test the high here again for crude oil, because definitely crude oil, as the day progresses, there are other things or other um, means of energy that would gradually take crude oil price into extension. So definitely the demand, okay, the demand for crude oil is not really there and will not really be that significant. Okay, so more ways in production. So we're looking at production, okay, or supply, okay, being greater than demand. And as a result of this, we will see then the price of crude oil go down. So if we have supply greater than demand, definitely the price is going to come down. Okay. So according to the law of economics, if the supply is then greater than the demand, we are going to see this price come down. Okay. So reverse would have been the case. Now we have this scenario in the market. Okay. So I don't know if I'm making sense also. If you like this presentation, you come down to the link below, and then you can join the free Telegram channel. Or if you want to get more on the paid subscribers, and you can actually be one of them by hitting that group and then looking for how you can do that. Okay, so what I expect to see of CAD in the next 3 to 4 months would be probably a sideways movement.
Low battery, please charge.
Okay, so probably if we are looking at in the next 2 months, okay, probably we are in end of August. Okay, we are at August end. Okay, so we are approaching September. Okay, just post Jackson Hole. Okay, post Jackson Hole. Now we will start to see certain things coming into the market. Probably, if we could test this previous high, which was also here in the market. Okay, so we are looking at hitting the 77.2 in terms of the CAD indices. Okay, so we are then seeing rise in the crude oil, but not as much as we want to see, because looking at this, we have various levels in the market which we would expect to start seeing those drops coming in. Okay, so if we would go into looking at the crude oil, crude, okay, independently, all right, let's just take this off for now. So if you're looking at crude, okay, we have seen that crude oil or WTI have struggled to make further move within this premise. So definitely we could expect a drop to come in the price, and then more of sideways, sideways movement for over a long time. So looking at everything in the market, this would force the central bank, okay, the central bank to review their interest rate. So if the economy is going down, then it will cause the central bank to review their interest rate, or probably cut the interest rate to about 1.2. Okay, so looking at all those things, guys, you believe by now that there is more to trading than just looking at charts independently. You want to be looking at other factors, and then being able to decipher what you want to do in the market at any given point in time. Okay, so with this said, I will also give you a setup which I promised. But before then, let me show you guys what I expect to see of the market in the next few months. Okay, so we'll be looking at the USD JPY chart. Okay, and if everyone would understand that the Jackson Hole is scheduled every year, okay, around August to be precise. All right, so August, this was August 2016 low. And you can see that from that point, we had a move to the upside. August 2017 low, move to the upside. August 2018 low, we then moved to the upside. August 2019 low. August 2019. So here we are in August 2020. Yeah, this is not just more a coincidence, okay? There is more to Forex trading than what you are thought, okay? You are taught to trade resistance, okay? And many of the times you get this wrong, okay? How many times have you traded resistance or support, and you could see price comes here through it, and then like nothing ever happened, and you are taught to trade support such as this on the retest, you go back. But definitely you can sit in such situations whereby you can put your sell order here, and you can see price just come back way more, taking over all this stop losses here, and then before the next drop. This is very big mind game, guys. You need to understand that there is more to forex trading than just looking at the chart and being able to make that decision. All right. So I will be making a webinar on how to use the CO2 report. This is a CO2 report, okay, of CAD. Okay, so I look at this on weekly basis, and I make meaning of all of this. So I look at the micro and I look at the macro, okay? Look at all these things week in, week out, to be able to decipher what the market is up to at any point in time. Because definitely, if you want to make money off the forex market, you want to be working in the footsteps of the large money. Okay, so back to our free tip, and we want to give it out now. If we would see that here, what happened here, this was March 2018 to February 2020. We could see that more of that time, 2 years or 1.5 years, that we had price trading inside of a contracting wage. Okay, so if we go up to bring back our tool, we would see that during that time, okay, during that time, could also see that oil price was actually moving up. Okay, oil price then dropped down. Okay, and here we have then started to see that oil price have no other way to go other than down. So if we look at this, okay, there is no much resemblance when we are looking at this and comparing this with EURCAD on the shorter term. But if you look at it on the longer term, you will be able to come to an understanding of what is happening in the whole market. Okay, so here we had then oil price starting to go up, also this high, and we also this dropping. Here oil price reached its high, and from that point which it got to its high, okay, there was nowhere else to go for oil price rather than down. Okay, so here from this point on, you can see that this is going up. It's going to go up continuously in order to take out all this information that happened here. So on the longer term, I am looking at possibly the EURCAD hitting the 1.7 mark on the long term, possibly within a year span, because by the time the CAD starts stalling and there is resumption of strength, okay, with the Euro index, okay, we would then see that the whole of here that we had the Euro index coming down, also the EURCAD coming down as a result of that. And from here, we could start seeing this rise coming up in the market. So definitely, we would then expect that the EURCAD would then gyrate from here into testing previous high or possibly this high after spending more than 2 years contracting during the time this man was still contracting. Okay, so we have seen that there is much of a correlation between the EURCAD than what we had with the crude oil. Okay, so now guys, what is your take on this? I expect the euro to get up to this zone here on the near term. Let's just get this out. Wow, I don't know what happened there, but let's just revert. Okay, revert there. I don't know what happened there, but I'm looking at the euro getting up to this point on the near term. Okay, let's just pen this to new scale and let's make this regular. All right, so I'm looking at the euro getting up to around the 1 point, um, around this zone, 1.24 in terms of the indices. So if this will be going up, definitely I would expect the EURCAD to actually still go up as well. Because looking at everything in the market, we would then look at the CO2 report to see that there is so much for the very first time. Okay, for the very first time, we have seen a lot of open interest and coming in on the euro as high as all time 704,050 open interest coming in here. This is high of all time. And at the moment, we are seeing high of all time too. Not really all time. The last time we had this difference was as high as back 2015. Okay, so 2015 when we had that coming into the market, let's quickly look at how the euro was playing far back 2015. So 2015 we had the euro consolidate more of from 215 after dropping to this zone, consolidate the majority of 215, and we are starting to see then from 217 we started to see this coming into the market. So there was great demand and accumulation instead of here. Then there was this mark up. Okay, price then stored here, distribution. Okay, there was this accumulation again. Definitely we are going up. Impulse, correction. Okay, an impulse. So I expect to see a W kind of pattern here for the euro. All right. So I spoke about this also yesterday in my webinar with the students that whatever is happening with the USD, okay, at the moment, okay, would go out, okay, and we'll start seeing the USD try to make some push up, but definitely the USD would drop one more time in the near term. That way, this would give this a lot of momentum to still continue going up, and also we'll see euro still going up. Okay, so I don't want to be the guy that say, haha, I said it, you guys are going to be doomed. I want to be the guy that is saying it now, and you guys are going to be prepared for it, and euro is going all the way up. So if we look at what we have here with the euro, okay, so let's just quickly go to the euro indices. Okay, so EXY, all right, and let's quickly see what is happening here. Is there any possibility of seeing the euro go into extinction? No way. Way more, guys. No way. We can't have, after this accumulation, mark up, distribution here, down to here. This move alone is strong enough to send euro back into testing this high. So we'll be looking for an opportunity to long the euro back into the zone. That way, we will then see the EURCAD move up, and then CAD will be sideways. That would also help in moving the EURCAD to our desired target. All right, guys, let's wrap this up. If you like this presentation and you want to learn more about it, you can just hit the link below and then join the Telegram group or ask at Doing FX, and then you get signed in. Okay, so let's look at what we have and why I put it that the whatever is happening with the dollar right now is only going to be a long-term effect that will still continue in the market. At the moment, we are having the DXY actually coming down to 92, but definitely, if we would want to see that this is an information about to form, so at the least, we would expect a test of the 0.68. So if we start having that rise coming into the market from this point to consolidate of some sort, we will then see the next drop happening in the near term, probably within a year or two. All right. So, guys, we can have this trading for a long while here. This started far back 2008. There was great demand for safe haven currencies, and you could also see that even with that, you can also see here reflecting on the government bond. Government bond have been flat, okay, making this all-time high last 10 years. So this 10-year government bond dropping to this point, this is a failed rally, could come back down into testing this zone. If there's liquidity, I would see it range around here before then the next drop. All right. So that'll be all for today. And if you like this presentation and you want to learn more about it, you hit the link below and you will be guided on how to get to the educator so you can learn more of this and apply this to your trading. I wish you all the very best in your success in your trading journey, and may your pay be above average. And remember that previous performance is not a guarantee of previous result is not a guarantee of future performance, and always trade with what you can afford to lose. Love you all and remain blessed.